Welcome to the CCN podcast, where we discuss the latest trends, companies, and people shaping the cryptocurrency space. I'm your host, Jake Sylvester. Hey, what's up, guys? Welcome to the 13th episode of the CCN podcast. By the way, sorry this episode is late. I was on a flight back from TechCrunch Disrupt San Francisco, which got repeatedly delayed, which is why you're probably hearing this on Monday instead of Sunday. We do have some good news, though. We have some awesome interviews coming out of that, including two people in the C-suite of Consensus, and a bunch more that we'll probably put out over episodes and articles in the coming weeks. Now, this week we're going to discuss the price drops, again, the new SEC hires, and rumors about Kraken's downfall. So first up, the price drops. Bitcoin is down 11%, Ethereum is down an astounding 31%, and the entire coin market cap is down 17%. So what happened? Well, we got all the way up to 7,400, and then we started dropping precipitously. This actually follows a pattern we've been seeing a lot recently, which is a mini rally followed by a pretty big drop, usually around $1,000. And this has happened at the $8,000 level, the $9,000 level, and the $7,000 level. Luckily, we have not seen this happen at the $6,000 level yet. But if this bear trend continues, I have no doubt we're going to end up there. So why is Ethereum down so much? Well, as usual, altcoins are going to fall faster and take longer to recover, but that really doesn't explain the 31% fall. This coin lost a third of its value and 3 times as much as Bitcoin, and it really has not shown any signs of recovery in terms of long-term price increases like we've seen from other coins that have suffered in the bear market. A lot of people still think this is from ICOs dumping Ethereum and shorting on the way down. The problem is if you give lots of Ethereum to ICOs that are competing with Ethereum, then they really have no incentive to hold on to it. And by selling and shorting on the way down, they can actually make a lot of money. Even if they didn't intend to do this, they're really left with no choice now, as Ethereum's down to $200 from its peak of over $1,000. Ethereum has actually caused the entire coin market cap to fall below the $200 billion level, along with a few other coins, with the entire coin market cap dropping 17% this week. Now, it is notable that early in the week, certain tokens surged, but a lot of those have lost any value they've gained and fallen into the red for the week. So again, we're seeing the trend. When alts fall, they fall harder than Bitcoin. Some good news this week. Trump hired a new SEC head named Michael Pawar, who in a statement about joining the SEC said the following. The SEC must examine and re-examine its rules, regulations, and guidelines to ensure that they are still working as intended to accomplish the SEC's mission. This is most recently manifested in areas such as data protection and cybersecurity, as well as the emergence of new investments in technologies such as initial coin offerings and blockchain. So it's important to note this appointment has had no noticeable effect on the price of any digital asset, but it is good to hear that the SEC is acknowledging cryptocurrencies in, if not a positive way, then a neutral way, and does intend to add some regulation. Next up this week, the confusion over Goldman's trading desk. So earlier this week, rumors were abound that Goldman was canceling plans to launch a cryptocurrency trading desk, and these rumors really got out of hand, so a senior Goldman executive, Martin Chavez, said that reports were fake news. His statement went on to indicate high institutional interest in a cryptocurrency trading desk at Goldman Sachs, and essentially said that if institutional clients wanted it, they were going to get it. More rumors this week came about exchange Kraken, when an anonymous Reddit user posted, quote, Kraken cryptocurrency exchange in Halifax, Unit 102 at 60 Highfield Park Drive has just laid off hundreds of people in response to a security breach, and there's currently a giant commotion happening up there. He went on to talk about private security all over the place, and basically he said that the exchange was in trouble due to a giant cybersecurity breach. This was followed by several comments about people that purportedly worked at that office and were being fired and escorted by security out of the building. Now, Kraken has repeatedly denied these rumors, and there's really nothing to substantiate them, but for some reason, these rumors have spread like wildfire and have really introduced a lot of FUD about Kraken, potentially even leading to some Twitter users saying that they've withdrawn their funds from the exchange. Finally, this week, we have an interview with TechCrunch editor-at-large Josh Constine. Josh is the authority in tech journalism on social networks like Facebook, and what's happening right now as far as impact and how they can use blockchain to solve some of these issues. His thoughts on transparency and the applications of blockchain are some of the best I've heard, and I was really excited to interview someone like him at TechCrunch Disrupt San Francisco. This is a fun interview, and as I said in the beginning of this episode, we have a lot more to come out of TechCrunch, and I really think you're going to enjoy this interview in particular. Hey, how's it going, everybody? I'm here with Josh Constine, the editor-at-large of TechCrunch. Hey, today, Josh.
I'm doing great. Thanks so much for having me.
Yeah, it's awesome to have you on. So you've been covering cryptocurrencies for a long time now. You've really seen them merge and just burst onto the scene. We're here at TechCrunch Disrupt, and I can tell you that every booth has some mention of blockchain, and even if they don't, the founders are talking about it. How can we integrate blockchain into these products?
It's like the new AI. Last year, every pitch deck had AI in it. Now every pitch deck has blockchain or tokens in it.
Yeah, it's the old every company is an AI company. Now every company is a blockchain company.
Totally. It seems to be an easy way to add a few extra million to your next round.
So, how long have you seen this trend coming for of mainstream blockchain companies?
I don't necessarily think of there being that many truly mainstream blockchain companies. I think beyond Coinbase, where we saw a huge flood of users in sort of late 2017, early 2018 spike in prices, I think that was the place where a lot of people got their first taste. But honestly, I think it's going to be a few more years before we get real mainstream applications for blockchain usage. And I think the main barrier to that is the usability. Engineering has really been the forefront of most cryptocurrency and blockchain developers, whereas the design, the usability, the UX has been often left behind, and so it falls very far behind a lot of what we're used to using every day. If anyone's used to logging into Facebook or logging into other apps using their Facebook login, they might think, if I want to use a new crypto decentralized app, I should be able to just hit a login button, right? It's like, no, you're going to have to remember this super long private key. If you type something in wrong, you can end up sending money to the wrong person. It's really just very complicated. So I think until the platforms get there and the usability of those sort of infrastructural parts of the blockchain ecosystem get there, it's going to be really difficult for us to see mainstream adoption of some of these decentralized apps.
How long do you think that's going to take? And just to follow that up real quick, we have had some like MyEther wallet, which have been breached, 2, 3, 4, 5 times now. So at what point do you think we're going to be at a maturity of those platforms where users are comfortable with it in their daily lives?
Unfortunately, security is a real cat and mouse game. It's all the attackers are always going to be improving their skills. So I don't think we're ever going to get to a point where, things are just secure. I think the really well-funded companies that have the ability to attract great talent and have that momentum, they're going to be okay. But I think at the same time, they're going to have larger targets on their backs. But it's those medium-sized companies that might be starting to actually steward a fair amount of money or tokens, but haven't had the funding or the momentum to recruit the best security talent. Those are going to be the ones that are really concerning. And the problem is, it just takes one bad breach, it just takes one time having your wallet stolen for people to be like, you know what, this whole thing is a bit too crazy, I'm going to step back. And I think that, combined with the depression in prices recently, has pushed a lot of mainstream investors away from cryptocurrency.
So, from a venture capital perspective, what kind of trends are you seeing?
I'm seeing that these crypto companies, at first we saw a quick wave of like games and things like CryptoKitties and things like FameBit that are designed to help you steward your cryptocurrency items and virtual goods. But I think after the downturn, we've seen that the real companies that are getting equity funding are these truly infrastructural, like scaffolding of the blockchain industry. There are people who are going to be doing things like compound in derivatives trading, where you can be able to short and trade on margin for cryptocurrencies, or things like 0x, where you're going to have a distributed and decentralized exchange for cryptocurrencies. These things that you sort of want to have in place before the mainstream adoption are what we're seeing getting funding from big companies like Andreessen Horowitz or even Coinbase itself. Whereas the kind of applications and the utilities that get built on top of that stuff, I think the big venture funds are waiting until all that infra is in place before they start investing in the content or the utilities that are built on top.
As far as a less startup type company goes, what are you thinking about IBM and even AWS and their approach to blockchain technologies?
I've heard a lot of talk about IBM, but I've also heard a lot of people who think it's kind of just a bunch of smoke and mirrors, that they might have a bunch of patents, but they're not really doing very much seriously with it. With AWS, there's definitely opportunities for decentralized storage systems and ways of doing assigning and doing accounting for storage space. But actually, the big company that I'm most bullish on in the blockchain space right now is Facebook. They've built this small but elite team of product managers and engineers, including David Marcus, who was formerly the head of PayPal and was the head of Facebook Messenger for years, and Kevin Weil, who was the head of product at Instagram, who launched Stories and really turned Instagram into the powerhouse that we know it as today. Them and some other highly elite engineers from Facebook have moved onto this blockchain team, and I'm very excited about what they're going to build. And what I think they probably will end up building is something that allows you to pay for stuff with the kind of advertisers that buy ads on Facebook, but with a cryptocurrency wallet instead of having to use actual cash. And for that, Facebook will be able to say, hey, get 4% off your purchase when you buy with Facecoin or whatever, like something like that. Also, I think that they might be the one that ends up building that identity platform, that login layer for the cryptocurrency decentralized app ecosystem. So the same way they built Facebook Connect for games and other apps around the web, they can build a similar identity system for the decentralized app layer. And so I think those are two really important areas that we're going to see. And then there's also just lots of opportunities for them in e-commerce, because they already have the relationships with all of these businesses and advertisers. They're not starting from scratch. And I think in some cases it may be easier for the big companies to build blockchain and bolt it onto their existing technology than it is going to be for blockchain first companies to build all of the other infra and business relationships necessary to launch some of these products.
So Facebook is an interesting point because they have a problem right now, and a pretty big one. And that problem is that their users don't trust them anymore. Do you see them using blockchain to try to solve that issue?
Unfortunately, while there's obviously a lot of opportunity for transparency and the decentralization, which means that you're not going to have centralized meddling or corruption, at the same time, when people hear blockchain, a lot of them think of stolen wallets, giant hacks, Mt. Gox, and these kind of big sort of flameouts, and they don't necessarily think of it as being a super secure industry. It's affiliated with the dark web. It's affiliated with a lot of the sort of scammers and the people who were in the ads business on the internet a few years ago. And so I don't necessarily think saying blockchain is going to make people trust Facebook anymore. In fact, I'm not sure there's a lot that Facebook can do to rebuild that trust. That said, I don't think people actually care about privacy that much. I think they care about utility and they care about where their friends are. The biggest problem for Facebook isn't that people don't trust it, it's that people's friends aren't there, that people aren't posting status updates anymore, that people have moved on to Snapchat and YouTube and Instagram. And luckily they own Instagram, so that's not as big of a problem for them. But really, they need to focus on the utility of their apps more than I think they do the privacy. Like, they need to avoid more scandals, but nobody's like, I choose my social network based on privacy.
Yeah, and I guess they also need to focus on increasing user engagement, which is funny because Zuckerberg in his New Year post basically said, well, user engagement's going to go down, profits are going to go down because we're focusing on privacy.
Yeah, I think it's focusing on privacy, but also focusing on digital well-being. I think that's the real thing that's weighed down on some of Facebook's profits. That and the fact that they said that they're going to double their security and content moderation force from 10,000 to 20,000 employees in order to prevent election interference and hate speech and other content problems on their network. That's what's really dragging down their profits right now, that and the engagement issue. And so if they want to fix that, there's a lot of things that they can do that don't really have anything to do with privacy. But around digital well-being, they want to have less viral video on the site, because that's the kind of low-quality content that people might watch and spend a lot of time watching, but it doesn't make you feel good afterwards. It makes you feel kind of like empty and like you just ate a big double cheeseburger. Like, it felt good for that one moment, but then you feel awful afterwards. And they're trying to clean that up because they know that long-term they need to have the people to have a good feeling when they leave Facebook if they're going to keep coming back for years to come. So I think we're going to see a lot more focus on how do you make sure every post that people see makes them feel good, or at least teaches them something, rather than it's just lots of blinking, flashing lights in that first 1 second of the video as you scroll by to capture your attention.
So the OpenID concept you brought up before is interesting because it allows for Facebook, which already has 2 billion users, probably more, to engage in KYC, which is a huge activity that generates probably hundreds of millions of dollars in revenue. Do you also see that having any effect on user engagement and solving some of the problems they've had with people impersonating Americans?
Yeah, I mean, one of the things that you can really rely on with Facebook is that if somebody has hundreds of friends, they're probably real. It's really tough to build up that kind of friend network if you're a fake account. And if you are, you basically are tying a bunch of fake accounts together. So if one gets busted, they all end up falling down like a stack of dominoes. And so Facebook does have a really good way of being able to tell who is real and who is fake out there. Hopefully, they're going to be using that to prevent some of this election interference in these fake accounts. But like you said, I think that could also give them a leg up when it comes to knowing your customer and making sure you're not doing money laundering or enabling fraud. And so again, that's one of those points where the big incumbents who already have built a lot of this technology may have an advantage over the smaller blockchain companies who might be in the right place in terms of their primary focus, but they haven't built up all that back-end technology they're going to need to become a success.
So one other question I have with Facebook, because you said they're in such a great position to do KYC and identify fake accounts, why haven't they been able to execute on that on Instagram, right? A platform where you have tons of fake accounts and verification is almost impossible to get, although I'm sure.
You know, I'm sure that there's always the fear that if you start terminating too many accounts, you're going to end up with some false positives and you're going to delete some really legitimate accounts. And especially over the last few years when they were truly battling it out with Snapchat, I think they were a little bit worried about that. And in the meantime, they have done a lot with artificial intelligence to start to be able to weed out fake comments or spam comments. I don't think you see nearly as many of those like buy Viagra or like easy way to make money at home kind of spam that you see in the Instagram comments like you used to. That doesn't mean that there's not a lot of bots and fake accounts who are trying to, comment in order to get you to follow them back so that they can make more money from sponsored posts, or just people running bots to increase their own personal following. And there are definitely troubles with that. And I hope that now that they've kind of vanquished Snapchat with it actually losing 3 million users in the last quarter, I think that means that they can stop focusing on the competition and start focusing on those internal fundamentals. And I think think that that's really going to mean focusing on safety and integrity of the service and making sure everyone on there is real. And yeah, I'm honestly, when I have friends who use those like auto commenting services to comment on all my photos in hopes of getting like me and other people to follow them back, I'm just like, what are you doing? Like, we're trying to be real people and interact with each other. Like, I get it if you're some business, but if you're doing this for your own personal account, you're probably just coming off like a jerk to all your friends.
That's interesting. So I want to segue back to blockchain real quick. Where do you see this in 3 to 5 years based on how you've seen it progress since you started covering it?
I think what we'll see is that the focus will move a lot away from, oh my gosh, how much is the Ethereum price, how much is the Bitcoin price, to what are the utilities that can be built on the blockchain. And I think there'll be plenty of those in the developed world for new financial services, new ways to prevent corruption in businesses and keep track of things. But I'm actually really excited about the financial inclusivity opportunities in the developing world, whether that's being able to create identification systems that are truly immutable for refugees so that they can access services, or provide bank accounts or something like a bank account to the unbanked in parts of the developing world where you might not want to have a bunch of cash on you because you could easily get robbed when security isn't as good in the physical world. But if you have it on a blockchain, it's tough for somebody to really steal it from you. So I think we're going to see some awesome opportunities, and that's where the real focus of the blockchain industry will be. That said, it's tough to tell where these coins are going to go. I do think it's probably pertinent for most people to have at least a small position in them, given that there's definitely an opportunity that they go from where they are now to many, many more zeros, worth a lot more than they are now. But you can only obviously invest what you're comfortable losing, because everything could just go to zero, especially if they don't, the cryptocurrencies don't solve some of these scalability problems. But fundamentally, there are so many coins out there that I think are really just giant scams that are basically just people who put out these tokens as a way to get rich. That people should really be focusing on those primary fundamental coins like Bitcoin and Ethereum, rather than worrying too much about speculating on all these random altcoins.
So one other thing I want to get your perspective on. We sat down earlier today with Joseph Lubin, who is the founder of Consensus. So Consensus is doing something really interesting. They have this hub and spoke model where they have 50 different companies that, in theory, could be unicorns. I think this is a real pivot from the traditional venture capital model, which is, let me raise $100 million, billion, or SoftBank, $100 billion fund. Let me invest in all these different venture capital companies. Do you think this is a trend we're going to see continue in crypto and outside of crypto, or do you think this is a one-time thing with Consensus?
So we've seen some of these startup studios over the years, whether that's North, or I think there's one called like Lone Pines out of Seattle, that basically they have a core team, often of like great product and technologists, and they come up with these ideas and then they farm them out to operators who take them on, and the core company and studio keeps a big percentage of the equity. What I've heard with Consensus is that their take is outrageous, like 50% or more. And so I think what that really signals is that there's a massive lack of legitimacy and proper signaling in the cryptocurrency industry. There's so many startups, so many developers out there, and nobody's really sure who to trust. And these startups are willing to give away a massive chunk of their equity if they can tie in with a reputable company with a good name brand like Consensus, who might be able to help them with recruiting and fundraising and these other things. And I think that that's really just this sign that there's a lot of lack of trust in the cryptocurrency industry. And I'm not sure that as the industry matures and some of that trust starts to accrue, that we'll necessarily see people being able to get away with as an exploitative of model as Consensus.
We are in a trustless industry. So anything else that you think is a really pressing trend that you want to talk about?
I think that some of the most important stuff right now is really around derivatives and shorts. There's been a lot of ways that you can buy cryptocurrency, but the problem is when you have a market where you can only buy and can't short, it's easy for bubbles to develop. And so it's actually really healthy for financial ecosystems to have methods to short these coins. And I think that that's going to be very important to the cryptocurrency world to make sure that the prices stay in check and we have less of that massive volatility. because nobody's going to want to use these as a currency or even a utility if the prices are fluctuating so massively. And so I hope that we'll see more startups and more developers embracing the idea of offering derivatives and ways to short cryptocurrencies. And I think with that, we'll see the kind of stability that will bring in the really big banks and investment banks and these massive corporations that control billions and billions of dollars. I think they'll only get involved with cryptocurrency once they're sure that custodianship and the bubbles and all these problems have been taken care of.
It's an interesting point, and Intercontinental Exchange, which owns the New York Stock Exchange, has just entered with Bakkt. What kind of consequences do you think that's going to have for the industry?
I think that it's important for there to be accessibility for buying cryptocurrencies, and because I think there certainly is an opportunity for financial mobility for people. That said, a lot of retail investors are not up to date enough on what's going on in crypto to be able to make wise investments. And I was talking with the Robinhood CEO about this earlier. When they launched Robinhood Crypto in February, the Ethereum price was in the 800s. Now it's in the 200s. That means most of the retail investors, mostly like younger kids without that much money who invested in Ethereum through Robinhood, have lost their money. And I think that it can be dangerous to offer that much accessibility and democratization of access without the accompanying education. So I hope that if the New York Stock Exchange wants to tie in with crypto, that it's doing enough to make sure that the people who do invest there aren't taking it the way that they invest in a normal stock, which probably has a lot more stability. I want them to get out there and do the education to say, hey, this is a volatile market. Never invest more than you're willing to lose 100% of. Otherwise, you're going to end up with more of those horror stories of people, mortgaging their homes or taking out loans or using their student loans and then burning it all and losing all their money on crypto and being stuck in debt.
Yeah, definitely some great insight. So thank you for coming on.
Yeah, absolutely. My pleasure. Thanks for coming to TechCrunch Disrupt.
As there are others.
The views and opinions expressed on this show are only those of its hosts and guests, and sometimes of no one at all. The CCN podcast was produced by Rockwood Audio and hosted by ccn.com. To find out more about CCN and the podcast, check us out at ccn.com. You can also follow us on Twitter at CryptoCoinsNews. If you enjoyed the show, please be sure to rate and subscribe.